Hello everyone, welcome to the Elliott Wave Forecast.com YouTube channel. My name is Henry Lau and today is Thursday, January 31st, 2019. The time is 4:30 a.m. GMT. So for today we are looking at the chart of the Exxon Mobil here. This is a 45 minutes chart and we can see right here that the rally to $73.30, we label that as ending with A. So by definition, if this is with A, it is a zigzag structure, right? And so the subdivision is going to be in 5 waves. So you can see with 3 here. Now we do not show all, this is a snapshot of the 1 hour chart. This is with 3 and then this is with 4 as a symmetrical triangle, right? And then we got this with 5 ending with A over here. And then we also got the pullback here to $70.38. We labeled that as a wave B. So this pullback is in the form of a zigzag, an A, B, C, in which the wave A is in a diagonal 5 ways, 1, 2, 3, 4, 5 over here. So now we are in the process of the next leg higher, which is the wave C, right? And the wave C by definition should be also in a 5 waves, and so now we are calling this as the internal of the wave 1. So this is the wave 1 of C over here that is currently unfolding as another 5 waves. So we are looking for Exxon Mobil to eventually break higher and break above the wave A for the confirmation that the wave C has really started. Okay, this stock needs to break above wave A, which is $73.30 approximately. It needs to break above here to confirm that the wave C leg has really started. Okay, now until then we can still do a double correction like this. For example, if we don't get a break above wave A, alternate we get a double correction like this, another 3 strengths pullback to end the P before the rally resumes again. Alright, so now let's take a look at the higher degree time frame in the Exxon Mobil here. If we look at the 4-hour chart, again we don't have any count here. For a full count of all time frames, you can always check us out in our full service. We have 14 days free trial and the link is provided in the description. So you can see here, this is, if you look at the 1 hour chart again, and this with A at $73.31 is over here, and this is the B. Okay, so if you look at the bigger time frame, you can see that this A here, it does look as if this is really a 5 waves, right? So you can label it perhaps something like this: 1, 2, and then we got 3, 4, and then 5, right? So it is a 5 waves, and then we get a 3 waves pullback here: 1, 2, 3, and then now if we can get a break above the A, that will confirm the C really starts, right? And then we can get another 5 waves up, and then in a zigzag, and the C leg potentially can go as high as the A leg. So potentially, if we assume it's really gonna break higher, then we can potentially go to as high as $79 approximately. Okay, now if we don't get if we don't get a break above wave A, then we can also do a double correction like I've been explaining. So which means that we can get a double like this, okay, before the next leg higher again afterwards. Now if we look at the correlated instrument, right, which is oil, because Exxon Mobil is producing oil. If you take a look at oil, now oil has already, you look at the structure, it looks very similar. It has a 5 waves, 1, 2, 3, 4, 5. It has a 3 waves pullback, but oil has already broken above the previous peak. So in other words, the underlying product of this company, Exxon Mobil, has already sort of led the way and broke above the previous peak and starting the next leg. So there is a chance for that reason that Exxon Mobil is going to follow along, and also we can expect this stock to also eventually break above here to follow oil. Okay, so I think probability wise we think that it has the chance to also start to break above here, even though from the confirmation, for a full confirmation, we do need to wait until it breaks above here to prevent or to avoid a double correction like this. Alright, so I hope you enjoyed this analysis, and see you guys again tomorrow.